Our trade on Arista Networks has now returned over 200% profit, and the same wealthy investor we've been tracking, the one that led us to this winning trade, is now placing a new trade worth $5.4 million before Arista Networks reports earnings in a few days, on August 5th. So in this video, we'll break down how this same wealthy investor is now trading Arista Networks. Is it still bullish and buying, expecting the stock to move higher, or bearish and selling, expecting the stock to move lower? And we'll show you how we updated our options trade into a no-loss strategy using the same strategy from this wealthy investor to manage risk and protect gains. Now, if you've been following our channel, you'll remember that we went long bullish on this day, June 11th, after detecting an unusual trade by a wealthy investor when the stock was still under $100 per share. And ever since then, it's broken above $100 and gained 30%. This was the video analysis we posted on our channel about 1 month ago, highlighting a $2 million trade made in the final minutes before the market closed. And we concluded that this unusual trade that was placed with just 10 minutes left looked very bullish, clearly flashing a buy signal. And as it turns out, our analysis was correct, because Arista Networks stock is now trading much higher. And so, if you want to learn more about how we did this, we'll put a link to this video up here. Don't forget to subscribe and hit the notification bell so you don't miss out on these very profitable opportunities. Now, keep in mind, even if you're subscribed to our channel, you could still miss out on these profitable trades. That's because we don't always have time to make a video. We spend most of our time analyzing data for the exclusive trades we share inside our membership. That's why we use email alerts. They're the fastest way to share trades, even when there's no video. And so, this was the email we sent out to our newsletter subscribers when we first detected this unusual option activity on June 11th, back when the stock was trading at $93.99 per share. And now it's much higher, trading at $122.09 per share. So if you want to start getting more profitable trade ideas like this, sign up for our free newsletter on our website. We'll put a link here. It's simple, quick, takes less than a minute, and best of all, it's completely free. No credit card, no paywall, just raw data-driven trade alerts based on unusual option activity, emailed straight to your inbox. And if you want full access to all our trade alerts, including real-time updates, detailed analysis, and earlier entries, consider joining the membership. You'll get direct access to the trades of wealthy investors and potential insiders, so you can see what the smart money is doing before the trade becomes highly profitable. Now, how much profit did we actually make from this trade? Understanding the size of that profit is important, because it's what allowed us to set up our next strategy with zero risk. We saw earlier on the chart that the stock gained 30% since we entered the trade. So if we had just bought shares, that would have been a solid 30% profit. But because we traded options, we had the leverage to amplify those profits, capturing even bigger gains. And so let's take a look at our original trade, the same options that a wealthy investor was trading as well. It was for these November 21st options at the 125 strike calls. A quantity of 5,471 contracts were traded for a price of $3.70 per contract. Keep in mind, this shows option prices, so we either move the decimal 2 places to the right or multiply by 100 since each option contract controls 100 shares of stock. That means each options contract costs $370. And so you can see here, our original analysis of this trade on the risk profile graph, where the profit or loss shows up here, and the x-axis represents the share price of the stock, which is currently trading over here, and the options expiration date and strike price are listed here, along with the initial cost of $370 per contract when we entered the trade. So according to this profit loss graph, which already takes into account the cost of the trade, we have a profit of $909 per contract. And to get the profit percentage, we need to divide this profit of $909 by the $370 of initial cost, and then multiply by 100 to express it as a percentage, and that gives us a return of 245% profit. In other words, we made more than double our original investment on this trade. And so, this is yet another real-time example of how we keep winning using data-driven analysis and trading strategies that track the trades of wealthy investors. Because understanding where smart money flows gives us deep insights into potential stock moves in the market. The rich often have better access to information, sometimes even leaked insider information, that help them make smarter financial decisions. It's no secret that the rich get richer when they trade based on deeper insights. And so, if you want to get access to more of these insights from the rich, then just head over to our website. We'll put a link up here. Keep in mind that our members also get earlier access to trades like this before anyone else, before we share it with the public. So if you're tired of being late and want more time to act on these opportunities, just head over to our website, where you can see in real time when and which stocks wealthy investors are trading on Wall Street, so that you can have the same opportunities as the rich. Because if the rich get richer, why shouldn't you? Now, with that being said, not all trades by wealthy investors are winners. Some end up as losses. That's why we do not follow just any wealthy investor. We track the smart ones who are highly strategic. Because based on the latest data, this wealthy investor wasn't just making a new trade. They used a risk management options strategy that we often use ourselves to minimize losses while maximizing profits. So let's go over how we updated this trade into a strategy that increases our upside potential while still keeping risk under control. As we can see here on the options time and sales tape, unusual option activity happened on July 30th at 10:36 a.m. at the 31-second mark for these November 21st options at the 140 strike calls and the 125 strike calls. Thousands of contracts were being traded. These 125 strike calls should look very familiar. It's the same exact options we've been analyzing and trading because of this smart, wealthy investor. After adding these quantities, we have a total of 5,600 contracts. Notice how these options are now priced at $1,200 each, much higher than $370, the price it was at when this trade started. And so, the same wealthy investor behind the initial trade back on June 11th is locking in profits by closing their original position at the 125 strike call options and then rolling those gains into this new trade at a higher strike price. So these November 21st options at the 140 strike calls are the new open trades. And so we can calculate the cost of this new trade by multiplying the total number of contracts by the options price per contract, which is 6.80, or in dollar terms, $680, by simply moving the decimal 2 places to the right. And so when we multiply this price by the quantity of contracts traded, 8,000, this equals a total trade cost of approximately $5.4 million for this new trade. But keep in mind, just because a trade is large does not necessarily mean it has a high probability of success. In fact, this one carries more risk than the smaller, more selective trades we share on our website. And so, if you want to get access to the lower risk trades with a higher probability of profit, then consider joining our membership on our website. The link is in the description. Now, with that said, even though this trade carries higher risk, we still took it because we managed the risk by rolling our previous position, just like how this wealthy investor did. As you can see here on the option chain, For the November 21st options, we also closed our previous position at the 125 strike call options and rolled into the 140 strike calls, marked here as POS, which stands for our new position. The green color indicates a buy position. And take a look at the updated data here. Over 8,000 contracts in the open interest, which supports our analysis that those 8,000 contracts were new opening trades. That is why we closed these 125 strike calls by selling them, locking in profits, and using those gains to buy these 140 strike calls, opening a new trade that cost less than the amount we sold the previous trade for. That means we entered this new trade at a credit, not a debit, making it a risk-free setup using only profits from our earlier trade. And so when we analyze our new trade now, you can see here on the risk profile graph, the buy position cancels out the sell position because they are the same November 21st options at the 125 strike calls. So we are just left with the 140 strike calls that expire November 21st. And so on the graph, you can see that if Arista Networks stock goes down, our trade would not have any negative loss because we've locked in more profits than the cost of our new trade. And that is how we manage risk, by minimizing losses. In this case, we eliminated any potential loss heading into earnings, while still giving ourselves the chance to gain more profits if the stock moves higher. But keep in mind, this no-loss strategy was only possible because we followed that smart, wealthy investor early, back on this day when the stock was trading under $100 per share. So if you missed our earlier analysis on Arista Networks, we'll link that video here so you can see exactly why we entered this winning trade that's now returned over 200% profit. And if you want to learn more about the strategies that give us an extra edge, then head over to our website. We'll link it here. As always, please like, subscribe, and until next time, let's keep tracking the trades of the rich so everyday investors can profit too. Take care and have a wonderful day.